All right, what's going on, guys? My name is Matt. And basically, what I wanted to start doing, just more for myself, just to help myself continue improving and keeping myself accountable. What I wanted to do is just kind of start doing reviews of every day. I'm going to record them and post them up every day, as opposed to going through the whole week or whatever. So I'm just going to start out with Friday. This Friday, it was January 6th, 2022. I didn't do it yesterday because it's what's it called? It's Saturday right now, but that's okay. I'm just going to start off today and do Friday. And yeah, we'll break down, or I'm going to basically break down everything I was seeing. So I'm going to take these off for now, but basically, I'll just start off on the 4 hour. No point in going up higher than that for intraday, in my opinion. Basically, what we had here was we had a sweep on liquidity here. We also had a sweep from right here. Okay. And then we had a break of structure. Really, this is the structural point, right? The last two down candles. And then we had 1, 2, 3 up candles. That's just a bullish order block. So I'm going to move it to there. So that's going to be our break in structure right there. Now, on Friday, we were right down here. So first of all, I was looking at shorts from right up here. I've actually been sick with COVID this week, so wasn't trading, but was just on the charts, just looking and seeing what was going on. And yeah, so was looking for shorts up here, gotten some demo shorts back down to here. I thought it was going to come back down, admittedly, to break this low. However, what I saw was this, and so you have to keep this in mind. So this was the daily. This is a daily break in structure, and then we had a 4 hour to come right back up. So essentially, what I was anticipating here was we had this break of structure, right? Consolidation, break of structure, come back up, mitigate this low, come back up to this high, where there's a nice little hidden order block right here. And this was in discount or in premium of this swing. So I thought that this was going to continue down here. But if we go down to the 1 hour, it'll become a little bit clearer. Let me just turn this into the sweep. Okay, so I'll just, first off, let me just mark out the daily structure here with just this. Okay, so this was the low, this was the high, we had that break in structure right here. Okay, so that means that this whole thing is going to be our trading range, right? And so as price was coming back up, again, nice shorts from right up here. And then we came back down. But what did we build here? So after we broke structure on the 4 hour, what do we have? Up, higher low, higher high. So that means that this point of interest has to be looked at, right? This point of interest has to be looked at because this is the most extreme point of this price swing. Not only that, there's a beautiful inducement right underneath it, like there. Okay, so I was looking at potentially looking at entries right here, but this happened at a weird time of the day, so like super late in the day. So I didn't look at anything there. Anyways, what ends up happening, we had a nice reaction off that to do what? Well, we sweep and break structure. Okay. Now, this could have easily have been that this broke structure right here. This comes back down. This is used as inducement up into somewhere up here and then comes back down, which is why I was also looking for shorts up in here. And there were some really beautiful opportunities right up there. However, what ended up happening was we failed to break lower. Okay, so if I just move this over here, then you'll see we come right back down to these wicks down in here. And these are the wicks really that swept liquidity. So the whole down candle swept liquidity. But you could see here that now on a smaller time frame, and I'll put it on in a different color here, so you can see what I'm talking about, where we had structure right here. Okay, so we had down, up, down. We broke that, so now we're in this trend, in this degree, we're in an uptrend. So as soon as we respect here, well, as soon as we respect right here, then what does that mean? We break structure, and now we're looking at least for this high to get taken out, right? Because that's going to be the target on this trading range right here. Okay. That's going to be the target on this trading range right here. But we also have to understand that there's this trading range right here on the 4-hour. So this is the other high that I'd be looking at to target. Okay. Now, so we have some upside targets as some serious potential to be looking at for longs. And then it's actually funny because as soon as we get this reaction right here, because who knows, this could have just broken down, but the fact that it respected here, and then again, we break structure again. So we have one, two, we have one here, 2, 3 structure breaks confirming this upside. And I think that's why the move was such a drastic move. Obviously, it was also NFP as well, but you could see here that now we have another trading range right here. Okay. And so this is where the Friday price action was before NFP. And yeah, so we'll go and break that down right now. But just wanted to point out, because again, this is our daily range, right? Meaning we had a consolidation, we had a sweep on liquidity, we had a move up there as potential inducement, and then we had this consolidation. It was looking like a consolidation forming. So where can we look at as a potential extreme point of interest? Well, right here is the last imbalance. So let me just mark this imbalance right here. Okay. So this is the last imbalance. It did get dabbled into a little bit with this, but this could just be used as an inducement in the future. You can see if we get a nice consolidation, something like this, and then up, it's potentially leading up into somewhere into this extreme, whether it be right here, right? This is the last real candle that hasn't been mitigated in this whole price action, in this whole price leg right here, or it could be using some higher time frame POI up in here, potentially even this last up candle right up there. Okay. So let's go in the 4-hour. Yeah, you could see right there, there's a imbalance fill. Really, I would just mark off this whole thing, honestly, because to me, price could easily just use this little thing as inducement as well, and get up into like 50% of this block. And so just to be safe, yeah, 50% of that block is exactly where that the black line is, which is that order block up there. So just keep that in mind. So anyways, these are going to be the levels that I'm going to be looking at for potential sells, right? Because if we get a sell model up here, we have a nice clean leg to take back down. And then we have all this liquidity built here, plus we're in a daily structure for downside. If not, if we break above this, then what I'm thinking is that we're going to be coming right back up to this little block, or this block up here is on the daily. But again, that's more of a swing where we had this consolidation. Okay, if that's potentially ended, then we're coming up here. So it all really depends on what's going on here. So I'm going to be monitoring price in the coming days here. But let's just go into Friday. As you can see, it starts off, well, the New York close was right here, and that's the start of Friday. But realistically, for me, I look at the 24-hour clock. So this is the true day open, according to like ICT teachings and stuff like that. So let's go midnight open, New York time, Eastern Standard Time. So let's go down to the 15-minute here. And now we know, okay, now we know we have Asian range here. London had a really interesting play that was going on here. There's actually multiple opportunities in London. But one of the things that caught my eye, and if I just go to the 5-minute here, you'll be able to see it. What happened was, so within this price leg, we have an even smaller fractal where we had a sweep, and then we had a break of structure here. Okay. Oh, I don't know why it's been doing this lately, but I can't ever click on the one I want. Okay. Anyways, so we break structure. What ends up happening? We come back down into this little break of structure here. You could see we sweep, tag back down into it. Again, we have another one right here where we sweep. Okay. And so now this candle right here is that bullish order block. And in London, we never got that mitigation. It actually stopped at, if I measure Asia right here, you can see it stopped right at the Asian midline order block. There's a nice Asian midline order block somewhere around there. Okay, so right at Asian midline. And what ended up happening, we had a sweep on liquidity, a break of structure, inducement right here. So look at this. Okay, beautiful. Boom. That was the Asia or the London trade right here. You can see the timing right there, 2:45. If you didn't catch that one, what ended up happening is it broke structure again. And at 3 a.m., you got that sweep back down, which is going to be pretty classic. Like this is a pretty classic London play. And then ultimately, this whole thing right here, let me just draw it out here. This whole thing is that market maker sell model that ICT teaches going right into an order block. So this was a beautiful long from here. This was a beautiful long from here. Here, you could have even added on to here. But again, where are we going to be targeting? So if I go back to the 15, because I kind of skipped a step there, was that although, yes, price has been bullishly breaking structure, right? That's the larger move. We have to be aware of this right here. This little fair value gap. Why? The reason being is because we swept and we broke structure. So this, even though this didn't break this low, and this is a failure to create a lower low, which means that this is likely to be, where is it? So even though this failed to create a lower low right here, right? Because ultimately what this should have done is sweep, break back down, and then we could have been using this and been more confident with this being a strong high. But the fact that this low didn't break, this makes this a little bit or more of a weaker trade. And that's why you can see right here, it used it, but only as a pullback to finish and lock in that that market maker sell model here right into that POI. And you can actually see it can even be even more refined down to just that wick, right into that wick imbalance right underneath all that. So that's beautiful right there. But anyways, I had this marked out at the beginning of the day, and I said that this is potential inducement right here. Okay, so this is going to be a potential inducement because if this is going to hold, right, and you can see actually it did again. It hit it right here on NFP, and look at that massive reaction down. It hit it right, this order block, right? So filled the imbalance, came back down, hit the order block, and came back down 24 pips. So, yeah. Anyways, I'm just saying that you should be aware of that level because in case this does break down, it's going to be selling from up there. In case it's just a pullback, it's probably going to be selling from right up there. Okay, that's all. So now we go back down to the 5-minute. And yeah, this was all the previous day, so don't worry about that. We can see obviously what happened in Asia. Really, we just had some consolidation. We had a nice sweep of this low here, and then we had the break of structure. These last 3 down candles are one order block. So that's what caused the break of structure. So we come back up, print out these equal highs with a shallow sweep on Asia highs. We come back down. That to me, this is an obvious setup for longs, in my opinion, in London. But really the one that you want to be going into, because this is in Frankfurt, this would be a Frankfurt open play, which you could still take for sure. But if you wanted to wait for London, this was just a beautiful setup in London, right? Where we have a full sell model or buy model, sorry, where we have right here, where we have a sweep on liquidity, right? So this is going to be the higher time frame one where we have consolidation, sweep, break up, come back into it and go, right? That's going to be our model right there. But then ultimately on a smaller time frame, we have a consolidation, sweep, break up, sweep, inducement, right into this POI. Now you can refine this POI. I would refine it right to here. And then what I would do is I would just mark out this from here to here as the gap fill. Okay. So this right here is your trading range. You could easily have taken this one right here. This has all elements of a buy model after mitigating off of Asian midline, giving us a buy model right here. And so I could have entered right off of this, especially because this is still a small stop. anything like 2.6 pips, 2.5 pips, like that's more than okay to me to take right there. There's no point in being greedy to get an extra 0.5 on that and missing the trade, right? But if you did mark out this OB here, this black one right there, and you missed that, no worries, because what ended up happening was, first of all, let me just take out all this so you can see it a little bit better, was after we hit off this level, what happens? We get a down candle, we get in a consumption of that down candle. Okay, so we can mark this out as the next OB, because look what happened beside it. See how we have a sweep on that we have this down candle, we have a sweep on it, break above, and then we broke 1 minute structure right here. So that in itself, if you didn't want to take this, you wanted to wait a little bit more for confirmation, you could have taken this one right here, right here. And let's see if there was any kind of divergence to confirm anything. So I have the dollar index right here. Okay, dollar index right here, and you can see right here, look at this, see these highs on the dollar index, they're going down. And you can see right here, we have lows on the euro US dollar, and they're also going down. We want to see an inverse relationship. When it doesn't happen, it means there's divergence, which means that this is a validated strong low or a high probability strong low. Okay. And then also, do we have any? Yep, right here too. See how we have lower lows here, and then look at on the RSI, we have higher lows. So we're gaining strength according to the RSI. We have a crack in correlation on the dollar index. So this validates this strong low. We also have structure and everything. So this is a really, really high probability and high confidence trade that you could take from this strong low. Additionally, let's see if there's anything from right here. No, nothing, but there is, yeah, right here. See this high right here on dollar index creates a higher high. It prints a higher high. And then on euro US dollar, we print a higher low. So if you wanted to wait for the break of structure here and the coming back down into this level, you can see that we just mitigated this little imbalance right up to here, right? That's where the liquidity was injected into the market at that candle. You can see a flat bottom injected in the market, huge move out, comes right back down to where liquidity was entering in the market, mitigates it, and continues up. Okay, so we have a nice confirmation on this one here. Maybe we didn't get a confirmation on this one. No, we didn't get a confirmation on this one. So if you didn't want to take that one, no worries. And you wanted to wait for the structure break, there was a potential opportunity right there. And you could have easily taken that with your stop, even here, like a nice 1.8 pip stop. I mean, that's about as tight as you really want to be taking trades with spread and everything. So again, you look at where did it go up to? Right there, 8.8 R. Again, you can still be looking at how price delivery was in Asia in London. And one of the things that's super interesting, and I love this model, I love how this looks, honestly. London was beautiful for this, where we have, again, we have relatively equal lows here. We have consolidation, breakout, consolidation, breakout, consolidation, breakout. This whole thing is just on the buy side of that sell model, right? Like the way that it's going up looks so corrective and choppy. And I just love that. I just love when it's efficient like this, because when it's efficient and we start to get a break of structure, you'll start to see some that sell model lock in as well, with an equal sell side as it looks on the buy side, if that makes sense. And if that doesn't make sense, what I mean is that the way that this looks on this side is likely to be very similar to looking on this side. Look at where all the corrections happen, right? And look where they happen on this side. Right? So you have a small correction there, small correction there, small correction there, small correction there, big correction here, big correction here. So you'll see that happen, and it's really super interesting. And that was something that was brought to my attention from ICT. So super grateful for that. But yeah, hopefully that made sense to you guys. But you can see here, the way price was delivering was very, very efficient. We have these series of down candles here, which is what? An order block. So we mark that out. You can see, boom, we got a nice consolidation off of it. respect, 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 break up. What ends up happening? We have these down close candles. That's an order block, right? And then realistically, these two were the last ones that caused the move. So you can see that, boom, we have a respect right there. We have a nice down candle, immediate consumption. So this is a nice order block, and you can see that it was respected, used as inducement right here, right? And then we went higher. Again, this one would have been a nice one as using as inducement and then coming back down to this level. But the problem is we already hit our premium level, right? Our premium POI. So because of that, what does that mean? These are going to be, the higher we get up from this level right here. I mean, besides, I would say besides Asian high, because Asian high is going to be used as a support as well in a bullish day. And so you can see that it was, right? We break above, we run through it a little bit, but it's ultimately maintaining that Asian high level. Okay. But as soon as we start breaking out above and we start getting into to premium levels, so above this high, really, we're starting to get into some areas that we don't want to be looking at entering longs, but more so managing our position. If we're going in long around here, managing our position to make sure that, you know, when structure is breaking and stuff like that, that we're being very cautious and being very aggressive with the risk management. So what ends up happening here is we touch this level again, inspecting it, we can see really like we're forming this kind of ending type channel. If I look on the RSI, or sorry, the divergence factor here, I don't see anything. See how we're creating lower lows on dollar index, higher highs on euro US dollar, but we get one crack in relation right here. So if I just get divergence tool out, you can see the crack in correlation right there. And then of course, that means this should be a strong high, which means as soon as it breaks this low, right, it should be, it's going to be confirmed, because as soon as this breaks this high, dollar index is confirmed. So it's just using the exact same one, which created the strong low on dollar index. It's going to create the strong high on euro US dollar. And then what happens? We break down here, look at that, right? This was the last up candle that swept structure, break back down, use it as a nice block, an order block there. And then we continue down to start breaking structure. So now we're starting to show bearish signs, bearish respecting of price levels. And so from here, you can start taking out your position if you didn't already from this level, or entering in shorts up and around these levels, targeting the Asian liquidity, because again, it's very highly probable that we're going to come down and take out Asian liquidity. If you know anything about smart money and anything about ICT's teachings, you're going to see that, yeah, like if one side of Asia is rated throughout the day, especially when you're looking like this, when you have this type of sell model right here, if it's looking like that, then it's very, very high probability that this side is going to go get rated as well. And if you just look back in history, I mean, look, we have Asian consolidation, sweep, sweep. Asian consolidation only got one way. Asian consolidation, sweep, sweep. So you can just see, like, go back in time and you'll be able to see, like, Asian liquidity usually gets swept on both sides before the move, or you might get some of these sometimes where it's just, and there's there's a way to trade that, but I don't want to really dive into that right now. But anyways, let's see what happened here. Okay, so again, we had some bearish order flow, beautiful, 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 coming all the way down. We know where these corrections are likely to be, right? We know that there's going to likely be one right here. Right. So again, as soon as, if there's something right here that gives you a nice buy or a sell model, then you can take it. We know that there's going to likely be a bigger correction here. Okay. Likely be a bigger correction here before taking out all these lows. And what do we get? We get this bigger correction here. Now, interesting enough, we had a sweep on liquidity there, sweep on liquidity there. So we had a double sweep and then a break of structure. Oh, that's not what I meant to do. Right, so then we had to break a structure. Where is it going to go back up to? Well, on the most extreme point, which is going to be right up here. Okay, so if you were shorting, you could have easily been shorting here, because again, look what time it is, right? 6:55. So this is early, right? This was London. This was London session right up to or the London kill zone goes right up to here, right at 5 a.m., right? So if I just mark this out to 1 a.m. my time, 1 a.m. to 5 a.m., this is going to be the London kill zone as per ICT. Okay, or you can do 2 for like the actual London kill zone, but sometimes it starts off a little early, so I just mark it off at 1. But you can see here, this is where that move happened, and look at the timings of these moves, right? 2 a.m. prints the low, 3 a.m. right here. So roughly around 3 a.m. prints this level as well. Sometimes you'll get 3 a.m. gets that sweep, and then it goes to as well, just to keep that in mind. You can see this whole run happened in London, right at the end of the London kill zone. What happens? We get a sweep, consolidation, or sweep, breakdown in structure. Okay, so in pre New York. Now, New York starts at 7. Okay, so 7, and this was an NFP day as well, right? So obviously there's going to be some kind of fuckery that happened, but it goes till about, I would just put it to 10 personally, because then after 10 is really London kill zone or London close. Okay, so you can see here, right as New York starts, you can see this one happened a little bit pre New York. So if you're trading within the time zones, like it has to be 7 or later, then yeah, you would have missed this 100%. But this gave actually a pretty decent setup, because we had, look at that, we had relatively equal lows right here. We had a very corrective structure going up. We have a little bit of inducement right here. Okay, so this high comes back down right in front, close proximity to this order block right here. Boom. So you could have taken there, targeting Asian lows, which is right here. And you can see, look at the response after Asian lows, right? Tags Asian lows, then we break structure, come back down, feed back down into this, just like what we had here, right? Where we have a break, sweep, just like we had right here, right? Sweep, break. Sweep, break, feeds back down into this block right here. And then look what happens. Mitigation, mitigation, boom. Rallies up to where? Hit that higher time frame order block somewhere around here. Where was it? Was it on the 15-minute? Yeah. Okay, so it hits that higher time frame order block right here. I'll just mark it in red just so you can see on the 1 minute much more clearly. You can see, look at that, right? Really a pip into it. And then we had a massive move back down, because again, we did front run this level again. And then this was just the inducement, right? So people are going to be looking to enter the markets in and around these levels. And you can see that there actually was, let me just clean this all up for a sec though. Right? If you're looking for a sweep, break a structure, this didn't mitigate this, right? This is the last down candle. It didn't mitigate, but look at that. It tags it right here. We get a 10 to 12 pip response, and then immediate consumption to take out any of the buyers that were in right here. Where does it go? Right down to that order block that's in close proximity to Asian lows that took out liquidity. So a beautiful order block right here. So this is the one that you really could have just entered on, because this is the most extreme point of the range, 3.3 pip stop. And then again, where's going to be our targets? Well, we have a strong high. Well, first of all, we have this one right here. Okay. We first of all have this one right here. Let me just delete all this stuff here so to clean it up. Okay, so we first have this one right here. Let me just go on the 5-minute, actually, be cleaner. Right, because this is going to be our trading range now, from this low to this high, right? It would have been this high at first, but as soon as we failed to break this high, and then we came back down to mitigate the most extreme, now this one becomes our trading range high. So this is going to be this is where I would be looking at taking out my first profit zone right here at 30 pips, especially again, 30 pips is a decent trade. And then again, going to be looking at taking out some profits right here, right at this high, depending on the reaction. And then finally at this high is probably where I would be taking out majority, because now what we have here is in this yellow degree right here, right? And let me just change this to yellow so you can see what I'm talking about. Or is it orange? Yeah, it's orange. So now we have up, down, up, and now this whole thing is a part of that yellow degree, right? We do have one here in the green degree. I'll show you what that looks like here, right? We have the green degree trade here that we broke structure right there beautifully, come back down, and now come back up. And then additionally, if you want to go even more dialed down into it, what we can do right here is in this degree right here, and we'll call this the red degree. Okay, so up, correction, up, down, break a structure, down. So now we converted to bullish in the red degree. And now you can see, now we have 1, 2, 3 different degrees, all confirming bullish moves at this very point. This leads to this massive, massive break in structure. So yeah, all this was really lined up beautifully on Friday to take this long from right here. And you could have been really confident in executing those longs for a potential. I mean, this was a 16 to 1 to get up to this high. If you're targeting this inducement up here, which is a decent level to be targeting, I think it's definitely going to get up to there, especially because of these. You see these relatively equal highs right here? This low resistance liquidity right there, right? That's where I think it's going to get up above anyways. So that would be a good place to target up into this fair value gap, or this imbalance right here, up at 3700s. 1.13700s would be a really good target. So if you were just targeting up above here, you can see that it'd been a nice 22R. And that's not even including what you took in London, what you took potentially in pre-New York, and what you took here. So there was very, very good opportunities on Friday if you knew what you were doing. So yeah, that's it, guys. I hope that added some clarity and some value into your trading. If you want me to, I mean, I'm going to be doing these anyways. Like, I'm just doing this for myself so then I can review every day. But I'm going to be doing it daily. So if you want to learn more, just follow along and I'll do the best I can to help. All right, guys. Cheers. Catch you in the next one.